What is going on? Welcome back to Financial Journey. So today I want to talk about SoFi. I do want to start off by going over the price action that has been happening, talk about exactly why it's not surging with the rest of the market. I do also want to go over some updated data points very relevant to a lot of investors and tie it all together with some technical analysis. Before I get into any of that though, you guys know the deal. Smash the thumbs up, subscribe, do all that fun stuff. Greatly appreciate that. If you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. Greatly appreciate that. With that, let's get right to it. So as you can see on the intraday chart, had a very downtrend start to the day. It is starting to make it up a little bit and find good support around the $11.42 range. But when it comes down to all of that, I'm going to talk on that near the end of the video, doing a little bit of technical analysis. But first and foremost, I just want to talk on why right now the market is surging. And it is largely because of this. So you can see non-farm payrolls, it is up massively. So that's a very bullish indicator. Definitely does show that there's a lot more money in the hands of consumers, which overall benefits everyone, including the overall economy. So that's one thing that's causing the market to rebound a little bit. As well, Amazon did come out, and there's a lot of other factors behind the scenes. But I do want to talk on some factors why SoFi is not surging as much as it is. Recently, the CEO of SoFi did actually meet with Jim Cramer. And for those that watch my channel, you know Jim Cramer is more of a joke to me, especially considering whatever he does actually like typically is cursed and it just goes down. Whatever he says is you basically do the opposite for him. And for those that do know Jim Cramer and have been watching him, he did do SoFi in a couple of lightning rounds, 2 times in fact, on which he said SoFi was a extremely massive buying opportunity. And so that could be a underlying cause. Obviously that is a little bit more of a joke, but especially when it comes down to it, like I've been doing a couple of videos, SoFi is going to be a very big deal, especially for 2022. So sometimes when it is down and not matching with the broader market, it makes you question exactly why it's not going up as much as it is or should be. So it is one of those things. I personally am just blaming Jim Cramer, as it's probably one of the easiest things to do. But there is some underlying facts that some investors should be aware of, that at the end of the day, when interest rates do potentially increase in March, SoFi's business model will obviously cause them to surge and to benefit significantly from that. But one underlying factor that a lot of investors are worried about is this. So this is from their recent balance sheet, and they do have upcoming earnings on March the 1st, I do believe. So that's something for us to look forward to. And I personally do think that's a very strong catalyst because of their guidance. They'll be talking a lot of positive things, but more so back to this. So you can see the balance sheet highlights total cash equivalent short-term investments, $730 million, and total long-term investments, $609 million. So overall, not too bad. But if you do compare that to the debt at $3.01 billion, that is pretty significant. And given the circumstances, like I've already mentioned, with a higher interest rate environment, definitely they do have to handle and deal with this debt. So most likely they will have to do dilution or a share offering in the near future to kind of get rid of this $3 billion in debt. Because like I said, interest rates go up, that is going to be one big burden on them as far as the overall company, regardless of if they are going to be flourishing on an operational standpoint. So that's something, like I said, that is causing it to lag a little bit, those couple factors. So like I said, I'm going to go through some data points very relevant to a lot of investors. I'm going to start with short interest. So 1753 is a short interest, up roughly about 9% from 1 week prior. Utilization is 57.98. Day by day change, it actually did increase by 1.53%, which works out to be 1.78 million shares being additionally shorted. So overall, that's something to always keep in mind about the shorts. And I do bring this up not necessarily because I think it's going to be a short squeeze, but I do think that the people shorting it are contrary to what we believe. So that's something to keep in mind as well. And all this information is available via Ortex. I do have a link to them in the description below for you to take a look at. Also, just want to go over options because the options activity, despite the sell-off and the suppression on SoFi's stock price, the options activity has been through the roof. So you can see today there has been 5 orders totaling $1.12 million worth, with 59% of them being positive. Yesterday was $7.05 million, 95% positive, and total average for 1 week, 91% of them being positive. So despite today, there is still a huge optimism for the long-term health of SoFi, regardless of all their debt and everything. So that is one good thing to look forward to. And with that, just want to touch on some institutions and hedge funds. So you can see technically right here, so TD Bank just recently made a position and at 1824. And I recently did bring this up during a live stream. I like SoFi. I like the fact that they have a huge institutional presence, and you can see that based on here as well. And not only that though, but look at a lot of these institutions and their average share price. So it's $18, $15, and so forth. So a lot of these institutions and hedge funds did find value at SoFi at $18. And when these were purchased by, for instance, TD, SoFi was not at that time a chartered bank. And so since then, it's become a charter. So again, so going back to the point, a lot of these institutions at these levels found value. So there's even just so much more value at these levels right now, especially with it being a charter. Because again, I keep bringing it up. Unfortunately, there is a lot of external circumstances that are causing SoFi to go down. But there is going to be a lot of good things when it comes to SoFi, especially in 2022, and a lot of institutions know that. And with that, I just want to touch on the live ticker you can see to my left, currently up roughly about 0.5%, 27 million in volume as of right now, whereas the average is 34, and roughly about 3 million in overall purchases by institutions, and you can tell that based on the block volume column. So like I already mentioned, a lot of institutions on a daily basis are buying into SoFi because there is a lot of value. And with that, just want to touch on some technicals. So I have the 50, 100, 200-day moving averages, Bollinger Bands, RSI stochastic momentum. So right now, momentum number of buyers is pretty constant, as you can see. A little bit of a deviation starting to occur. So the red line is above the black, showing technically a little bit more of a bearish sentiment. And on the actual chart, we are lower percentile of the Bollinger Band. We recently did try to break out of that into the higher percentile. We did get rejected by a lot of strong resistance. So we are kind of consolidating a little bit. Hopefully we'll be attempting that again. And with that, I just want to show you some Fibonacci levels. So as of right now, our biggest support is $10.88. So that has yet to be tested, but again, that is one of those ones that definitely has a lot of strong support for us. So hopefully we'll be range bound from this time period, and hopefully, like I said, trend up a little bit closer to our earnings, which I believe is March the 1st. And definitely, I do strongly feel that the guidance will be enough to put us over that $13.15 and kind of trend us a little bit higher. Because once we easily get from the lower to the higher percentile of the Bollinger Band, we can easily trend up and break past that $17 mark with all the right catalysts. Because given the market and everything, we should be easily at $20, especially with that new charter news. But like I said, it is what it is. Let me know what you think in the comments below, or if you do strongly feel we should all solely blame Jim Cramer for all of this. I completely agree with that. Let me know in the comments below what you think about that. If you haven't already, smash a thumbs up, subscribe, do all that fun stuff. Greatly appreciate that. If you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom screen. Greatly appreciate that. With that, let's all make a lot of money on SoFi.